like it was one of those days, right, where neither the Bulls nor the Bears won. There's so much pessimism. Everyone was looking at SGX Nifty this point yesterday and going bonkers that we're going to go down by 200, 300 points, and then we recover completely and gain some before
Yeah.
returning back some of it to end slightly lower. So very, very, very volatile day indeed. But clearly the markets seem to be in the mood where they just absolutely don't care with what's happening on the global scenario, and just focused on domestic driven themes and domestic driven ideas and factors.
And it's bloodbath on the U.S. markets out there. I'm just looking at what has been the losses and it's a little like, okay, that's like a complete chaotic space, and here we are happily coasting at 18,000 levels, and everybody's like, acha, 18,000, and I'm like, okay, it's quite the news day, to be really honest. So yeah.
Yeah, absolutely. Ashish, I'm really not sure what's the hang up. In case you have joined from your computer or your laptop, um, do log out and join through your phone, because otherwise you won't be able
Yes.
to get off the mic. Okay, I think
Am
you.
I audible now?
Yes,
Oh, yes, you
yes,
are.
you are.
Hello, sir. Welcome aboard.
Yeah, hi. Thank you. Thank you. I think it was on mute, and
Yes.
so yeah, now I have yeah joined. Yep.
Happens to the best of us. No
Yeah.
sweat there at all. For those
Yeah.
of you who have
Yeah.
just joined in, folks, this is Ashish Chaturmota, the head of research at JM FinServ. And Ashish, good evening on behalf of StockTwits and BI India. Good to have you joining us. And like Yash and I had just started chatting with, um, there's reasonably happy news in the Indian markets, and there's chaos outside the borders. But let's start with the happy news before Yash starts dissecting everything outside the borders. 18,000 being tested again. How do your first reactions on us being at this level right now?
So I'll say that rather than being happy about 18,000, the good part is that if I look year to date, entire global markets, then we are happy to see that only two markets which have been very positive, one Indian market and the other being Jakarta market, and
Yeah.
rest of other markets have been hugely underperforming our market. And this sense we were getting because at the time when we were witnessing almost $12 billion kind of selling from FIs, during that time we were surprised to see the markets just corrected hardly 13-14%. So I think that itself was a sign of great strength for markets like India. Despite these kind of huge sell off, FIs almost exited 5% of their entire holding in the
Yeah.
Indian market. And we were just trying to stabilize at around 13-14% kind of drawdown, and that is just index level. If you look at a lot of sectors, whether it's banking, financials, or auto, or maybe capital goods, a lot of these names hardly corrected even 5 to 8% kind of drawdown in this entire fall. So all in all, that itself was a great sign of strength. And today again we witnessed same amount of strength when yesterday Dow corrected more than 4%, Nasdaq corrected 5%, and in that environment we are almost flat and hitting almost April 2022 highs is a sign that indicates that 17A 500 600 is going to become a very strong base in a shorter term. And eventually, now, the way markets are looking, it looks like we are going to cross or test fresh new all-time highs very soon, or maybe probably by Diwali.
Nice. So just a quick follow-on question to that, Ashish. If we hold 18,000 tomorrow, do you anticipate that we might touch 18 too?
Yeah. So see, my sense is, if we even maintain, so my view is not 18,200. My view is in some way, somewhere different. That if we don't break 17,700 on a closing basis, then we are headed for a new all-time high, which
Oh,
can
lovely.
cross towards 18,500, 18,600.
Nice. You made me look like the pessimist in here. So thanks.
Nice,
Yes.
interesting. Ashish has always uh, been very bold about his projections and his bets. So yours was a very conservative
I was very
target of
conservative.
18,200.
I know.
Ashish, I know from the past. I mean, you're more of a technical guy, but in your new role as head of research, it goes without saying that I will ask you about some of the macro points and quick thoughts on the U.S. inflation data and possible action by the U.S. Fed in its meeting next week. What are you anticipating will happen?
So one thing is for sure, this inflation number was kind of unexpected, and that too on a month-on-month basis. This kind of jump in inflation, despite the fact a lot of commodities, whether it's crude or whether it's industrial commodities, we have seen a good sell-off. But despite that fact, the month-on-month rise in this inflation, it was definitely a cause of concern, and that's the reason we have seen this kind of massive drawdown in the global markets. Obviously, this is going to, with lot of certainty is what, this Bloomberg is saying, that with lot of certainty, 75 basis point is what, market is expecting, and even a hike, close to 1% could not be ruled out. So I think somewhere it is already into the price. The short term interest rates are crossing the long term in yields, and that's where, that inverted yield curve structure is happening, and that's where this entire recession talk is happening. So yes, if you ask me whether the same amount of optimism which we are talking regarding Indian markets, do we have the same kind of optimism for the global markets? The answer is clearly no. We believe that yes, there is kind of decoupling which is happening, and global concerns are there. We should be worried, and that's why I specifically mentioned that I'm not worried about whether we'll see 1800 or 200. My bigger thought process that market should not breach 17700 in this global sell off, and if that is not the case, then our trajectory is very strong. So yes, global concerns are there, and with inflation as a big risk, interest rates are going to rise, and again emerging markets will take that call to protect their currency. So we might see surge in interest rate, but look into this. The interest rate sensitive sectors, whether it is industrials, whether it is capital goods, whether it is banking, whether it is auto, most of these sectors are showing amazing strength. When you are having a sense that interest rates are going to rise, this kind of strength which you are witnessing in these kind of sectors itself is talking that something is priced into the market.
So in that case, Ashish, so like you said, 17,700 would be the line in the sand, and buy on dips until that level, and otherwise, if not, then you have a cautious stance.
Yes, you got it right. So if it breaches 17,700 on a closing basis, then definitely that's a first sign of exit. And as we say, nobody can catch the bottom, nobody can catch the top, and I don't want to catch the top. So if let's say the top is 18,100, I'm happy to exit my positions at 17,700. But looking into the structure, the kind of, so I'll give you one more data point. So let's say if you look at the index contribution today, banking contributes close to 30 to 35% of the index, and if you look at bank nifty is hitting a high after consolidating for good 10 months. So that's a massive breakout which has happened in bank nifty. If you look at Reliance, it has been consistently consolidating. We have seen already a good sell off into IT, so maybe there could be a consolidation at these levels, but no further big drawdown is what we don't expect that kind of drawdown in IT. So all in all, a lot of these index contributors are showing signs of strength, and that is giving me confidence that this 17,700, 17,600 zone is going to remain protected.
Awesome. Over to you, Ashwin. Ashwin, you're on mute.
Yep, guilty as charged again. Thanks for that, Yash. Ashish, I just want to quickly come in on the IT space. IT is not really having the best momentum, some tips around the space. And also this morning, ET was screaming about the IT attrition issue and how subcontracting is on the rise. How are you reading these entire signals, and how do you expect the sector to fare in the near term?
So see, I have something to discuss on the IT side. So yes, there is a one tailwind which is a rupee weakening towards its all-time low level, and you have dollar index which is showing clearly signs of very strong strength. But if you look at the demand side of the IT, then because of this rising interest rate environment in US, we definitely expect some kind of lowering on the discretionary IT spending. And if that is the case, then I think the revenue growth momentum which we witnessed from 2000 and particularly after COVID period, I think that is going to see some deceleration. So one, from the revenue growth momentum, you are going to see some disappointment. Secondly, if you look at on the margins front, so because of wage attrition, because of a lot of this travel cost coming back, onshore, offshore. So I think that's where the margins are going to come under pressure. And in that environment, you have a lot of these mid cap IT companies, despite correction, they are still quoting at a 35, 36 kind of PE multiple. So if you look at the average PE multiple pre-COVID, a lot of these companies used to trade in a range of 20, 25 time
Yeah.
forward basis. Now that number is 35, 36. So still there is a premium, and because this demand is going to slow down, I think this is one sector which is going to underperform. Although I don't have a sell recommendation, but my sense is one should be underweight in IT in a portfolio, and one should be overweight in banking, financial, constructions, and capital goods.
Well, lovely. We'll talk about fintech in just a little moment, but Yash, over to you for the moment.
Ashish, I know you had a long list of sectors that you mentioned right now, but targeting more specifically the festive season, which is just around the corner, any sectors or stocks in particular that you think could give good returns in the short term based on the festive season?
Yeah, so I think, see, we have to understand that. First I'll talk about the hotel segment. So if you look at hotel in the last, I what I remember out of 10, 15 years of my of whatever I'm looking into hotel industry, they have not seen margins beyond 30%. So this is the first quarter where we are witnessing this kind of 30% kind of margin, which has not been seen in last 10, 15 years. And this quarter was basically a very lean quarter. So it was not a festive quarter, this quarter which has gone by. But if you look at the sales momentum, the occupancy rate, the average room rate growth, all has been on a upward trajectory in a quarter which was a dull quarter. Now festive seasons are coming. Now foreign tourists are going to come because COVID related issues are also going to come down. So now we expect not only the occupancy rate, because occupancy rate is already at a reasonably high level, and with no fresh capacity coming into the hotel industry, now we expect the average room rates to rise, and that's where it is going to hit your EBITDA and PAT level directly. And also a lot of these hotel companies, now what they are trying to do is they are trying to do a asset light business model. So Indian Hotel is saying that good 30 to 40% of their business will eventually come from management contract and asset light model. Food and beverages is going to contribute, which is again going to add to the EBITDA margin, and that is also getting reflected into the charts of lot of these luxury hotels, where you are witnessing Indian Hotel hitting a new all time high after consolidating for good 10, 12 years. And that's the case with something small cap like Royal Orchid or Charlotte Hotel, or a lot of these names. So I think that is one space which looks very good to me. Titan is showing very strong numbers. Jewelry is now close to 56%. Sorry, this a new so basically this 88% of the business is now coming from the jewelry segment, and within that also the margin improvement is happening. Again, festive season, I think Titan is going to be one stock which looks very good. One theme which we should not miss is the entire QSR theme. So whether you look into Devyani, Sapphire, Jubilant Food, I think the way they are expanding the store addition. So let's say Jubilant Food is talking about 1,000 stores in to be added. Sapphire, Devyani talking about 200 to 50 numbers to be added every year. And Pope's new business is also going to see a lot of 200 to 50 kind of addition in terms of store. I think we are going to see a lot of shift from unorganized to organized segment. Spending is going to be significantly higher. Margins are going to improve, and if you look at Jubilant Food, which has corrected good 30 to 40% from its peak valuation, these kind of stocks will see a very good upward trajectory. So Jubilant Food, Devyani, and Sapphire is my top pick, and then something like Vedant Fashion, Metro brand. These are certain themes within the consumption basket which looks promising to us.
All right, that's a pretty exhaustive list, and I hope you guys are taking a note of that. But Ashish, moving on to another sector which perhaps has seen a decent enough comeback, like most of the broader market, that is the metal sector. I know a lot of people have perhaps entered slightly at the later stage in the upcycle and are just seeing their holdings break even, or also or maybe still stuck with losses. Can we see new highs for some of these metal names?
So, I always differentiate my ideas between long-term positional ideas and something like pullback trades. And looking into metals, I think now it has entered. So in 2019-20, it was like a positional bet, and now I will consider them as a short-term pullback trade. Why do I say that? So if you look at the prices of aluminum, copper, zinc, lead, iron ore, steel, everything has corrected good 20 to 40% in the last couple of months, and we need to understand the way metal works. It is a direct correlation with how the commodity prices moves up. If the commodity prices are going to correct, then you cannot expect a significant margin expansion, or you can't expect a significant profitability jump. What So I think that has already happened. And if you look at the way we look, metal is a little contrary. If the P multiple is become very cheap, that means earnings have reached to a peak level, and there could be a deceleration in earning. So that is what we expect. Pre-COVID, most of these metal stocks used to trade at a 20, 30, 40 PE multiple. Now if you look at most of the metal stocks, they are quoting at 5 to 6 PE multiple. That's a sign that maybe they have topped out.
All right,
Thanks for
got
that,
it. So
Ashish.
perhaps not the most ideal space to be in, metals.
Right.
Okay, over to you, Ashwin.
On that note, what's your take on fintech at this point of time, Ashish?
So I think, see, they have seen decent amount of correction,
Yeah.
and now I think at these prices, some of the players are looking little interesting. So I'll speak
Okay.
about Zomato. So let's say Zomato, is been talking in his recent commentary that in next 1 to 2 quarter they are going to be EBITDA positive. And if that is the case, then I think a lot of people who sold these stocks because they were continuously loss making, by financial year 24-25 estimate basis, we expect them to be profitable. And if that is the situation, then already these stocks have seen, like Zomato itself has corrected from 170 to almost 63 levels. So we are getting these stock at 45 percent from from its peak levels, and now the stock is going to turn profitable. And that's where my sense is that at these levels Zomato makes a lot of sense for a medium to long term investor. Although, because I'm looking into technical, my sense is 50 to 53 is going to be a very strong base for Zomato. And if these levels are not breached, I'm expecting stock to enter into 3 digit in next 6 to 9 months time frame. So that is one stock which we like. We even like, for that matter, Nazara, because we think gaming as an industry is going to has a massive tailwind. And again, this stock has seen correction from 1700 to almost 748. We are seeing some very significant volume activity in the last 3 month time. So we basis this volume activity, my sense is some smart money has definitely entered the stock, has entered the stock. And now going forward, we might expect good 20 to 25% kind of upside. And Nazara, with new GST policy, there is going to be a lot of differentiation, which is going to be in the advantageous side to players like Nazara.
Yeah, and also just to add to your point, Ashish, on Nazara, there was also, I think, a news update that Google Play Store will soon allow uh, and fantasy and betting or card games to be installed on the Play Store. So
Yes, yes,
users will be able to download it straight away from the Play Store instead of side loading or playing it through their browser. So that's another positive trigger for Nazara.
right, right.
Yeah. Absolutely. And in fact, even for Zomato, again, lots of news. In Q1 itself, actually, the core food delivery business turned a bit of break even, and their operating metrics have been consistently improving. It's just that all the news flow around things like their recent investments, the valuations at which they came with the IPO, the whole tech sell off in the US, perhaps. Uh, blew the wind out of its sails. But let's see, Zomato again is another name which has done uh, quite well for itself. But moving on, that's another space which people had completely written off. It's the state-owned banks, and look at how well they've performed versus their large cap or private peers. Would you still, Ashish, bet on the PSU names, or do you expect this underperformance from the private banks to reverse?
No, definitely we expect some positive, upside coming from the entire PSU lots. And the reason is, because we believe that this entire, manufacturing theme is going to be a next decadal theme. And if manufacturing as a percentage of GDP is going to grow from 15% to 25%, then I think what we need is a huge amount of, fresh capex. And if this capex has to come, then we need to reach to a certain level of capacity utilization, which we have already done. For a lot of industry, we have reached 83 to 84% kind of capacity utilization. So if fresh capex is going to be the theme, then who is going to fund all this? capex, and that's where I think the entire PSU banking makes a lot of sense. Where this fresh capex is going to happen, we have already seen a lot of NPAs have been written off. If you look at SBI's balance sheet size, it is close to 39 lakh crore. HDFC Bank put together is 29 lakh crore. So the capability which these PSU banks have in terms of financing this corporate capex plan, I think that's where the trend is going to establish. If you look at the multiples, most of these banks are available at 0.6, 0.7 time price to adjusted book value. And my sense is, and that's why I've recommended also in my earlier call to all my investors, is rather than buying individual stock, buy PSU Bank B's ETF, which is a combination of SBI, Bank of Baroda, Canara Bank, Union, PNB, rather than betting onto any single name. Obviously, if I have to pick one name, then it is going to be SBI. But to take the advantage of the entire sector, I think the ideal thing is one should buy PSU Bank B's ETF. There, I think a good 20 to 30% upside in the immediate, next 6 to 9 months could be witnessed.
Awesome. So that's a very good advice for all those who are probably confused between private banks and PSU banks. Ashish, one more point: the IPO season is back in its full glory. Harsha Engineering's IPO, the fourth IPO in as many number of weeks. Um, do you guys have a house view on the public offer?
Honestly, I have not tracked it, so maybe some of our analysts must be tracking. But at this point of time, I have not tracked the stock. But I can tell you, uh, the interest in IPO market is again coming back. There is a very good demand even for Harsha Engineering. If you look at, it is one of the largest manufacturer of precision bearing cages in India, and
Right.
which is with almost 50 to 60% market share. It is also one of the leading players globally with market share of close to 6.5% for brass, steel, and polyamide. But whether one should apply or not for that valuation aspects, I need to check. But one thing is for sure, the demand side of coming back to this IPO market is definitely gaining a lot of traction.
Actually, just a thought on that, on the IPO front, right? Now, SEBI is not really happy with the way the startups are being valued, right? Do you expect IPOs that are going to be launched in the future to be affected by the way SEBI is looking at how valuations are done?
So a little tricky to say, and as as I was listening to SEBI's chief, and where they said that they are not going to interfere with the pricing part, but definitely, So I think that's an area where we need. It will lot of depend on the flows basically. So I think nothing more to add here. Yeah.
Okay, copy that. And folks, for those of you listening, if you just joined in midway, we are chatting with Ashish Chaturmota, the head of research at JM FinServe. And if you guys have any questions, drop them a line, and we're happy to take them up. And we have some coming around already, and Yash will take them. So drop us just drop us a tweet on the thread that is. Proclaiming the spaces, and we'll bubble them into the conversation. So Yash, you want to lead the Q&A bit?
Yeah, I've already added Anushri. Please go ahead and you can unmute yourself and ask your question.
My question is that until my order is not delivered on time, I am not bullish on Zomato. Second, rather than Nazara, Zero the application is the best bet to play gaming because my government, my prime minister is playing on Make in India. Focus on that. That is my view. If you agree or disagree, your view, please.
All right, I'm not sure how much of a question that was, but
My question is
we,
that.
we we
My question is that.
okay. Let me just add Shivam as a speaker. Um, yeah, okay. Shivam, you've been added as a speaker. Go ahead and unmute yourself.
जी, सभी बंधुओं को जय श्री राम, हर हर महादेव। हमारे जितने भी सनातनी भाई लोग बने हुए हैं, भारतवासी,
सर जी, आपका कोई क्वेश्चन है रिगार्डिंग मार्केट्स और इन्वेस्टमेंट?
जी, बिल्कुल है। मैं यहाँ पर कहना चाहूँगा कि ये जितने भी बिजनेस फैल रहे हैं मार्केट की तीव्र गति से अपने भारत में, ये और कुछ नहीं, सिर्फ ध्यान भटकाने का एक जरिया है। पैसा तो इसमें मिलता है, जितना मिलता है वो सबको पता है। और
Okay, sir. Thank you. Thank you. Thank you. Thank you. Thank you. Okay, so we have very interesting people asking for speaker access today. Um, Ashish, just a few questions that we have already received in the comment section. Let me take through some of them. Ramesh wants to know your thoughts on any of the holding companies. Today, Tata Investments was up 20%. There was also a lot of traction in Bajaj Holdings and Maharashtra Scooters. BBTC is probably another stock which is up about 4.5%. Any of these holding companies that you like?
So yes, some names are gaining a lot of traction. We like Pilani Investments, we like Tata Investment Corporation. We like Maharashtra Scooters because they have holdings in Bajaj Finance, Bajaj Auto, Bajaj Finserv, and most of these companies are paying a lot of high dividends. So the dividend payout ratio in a lot of these companies is very high. And if you look at the discount was quite significant, which is trying to now catch up. And with new corporate law practice, I think there's going to be a lot of this advantage. This holding company will come into a lot of advantage. So this discount is going to narrow down in coming few years, and that makes us positive in stocks like Pilani Investment, Tata Investment Corporation, and Maharashtra Scooters.
All right,
And
interesting.
more thing I would like to add is it's not just holding company like Maharashtra Scooter, Pani and other stuff. Even company like Mahindra, which is a conglomerate which is holding into Mahindra Financials. Then they have Tech Mahindra Holding is there. I think these kind of diversified players, even Reliance for that matter, which is a holding into which is going to might at some point of TC demerger Grasim. So these kind of companies also is going to be in a very a good position. So Grasim, Reliance, Mahindra as a diversified play looks very promising.
Got it. Ashwin?
Yes, sir. I'm just going to take some comments that have come out here. Pankaj Singh saying this, and he says there's a strong resilience seen in the Indian market. Could this be a sign that domestic investors will be able to handle future events and decoupling from other markets? How do you read this thought, Ashish?
Sorry, could you please repeat your question?
No, the comment from Pankaj is that there's a strong resilience seen in the Indian market. Can you
Right.
see this as a sign that domestic investors are able to handle future events and decouple their thoughts from the from the other markets?
So yes, definitely. If you look at the monthly, SIP flows is more than 12,000 crores, and that's a very very good number. And the way you look at the DMAT has reached almost 10 crore numbers. So with these kind of penetration of to the financial savings and the kind of SIP numbers, DII numbers, and we have already witnessed that. So when FIs were selling to the tune of almost $12 billion in that environment, every day we used to saw that DIs were buying almost equally or maybe at some point of time significantly higher than what DIs were selling. And that was the reason why markets never fell beyond 13-14% on a sustainable basis. And that gives us a very good signal that our market is now going to see a lot of dependency on retail participation. And if you look at retail participation even in something like speculative market like FNO is now reached to almost 51 percent. So that number you at one point of time used to be 20-25%, that has gone to beyond 51% itself is an indication. It's not just the which is very I would say and a skill set is required in that kind of markets like derivatives. We are seeing this kind of scope. You meet anyone today and he's expert in option writing. So that is a kind of trend change which has happened in last 5-7 years.
Got it. Thanks for those comments, Ashish. Yash?
Yeah. Ashish, another Ashish wants to know your view on agrochemicals and specialty chemical businesses.
Yeah, so specialty chemicals, we are quite constructive. In fact, we believe that this year itself, a lot of the specialty companies put together has done a capex of more than 15,000 crores. I was reading into the commentary of one of my favorite company, SRF, and they've said that almost 15,000 crore capex is what they have indicated in the next 5 years. And out of these 15,000 crore capex, 12,500 crore capex is going to be just into specialty chemical. They are moving into the value chain where they are moving from specialty chemical to something like HFOs. They are moving into something like they want to increase the share of pharmaceutical from 15 to 25% in the overall scheme, and that's where the margin expansion is going to take place in companies like SRF, Naveen Fluorine, and Gujarat Fluoro. So my sense is that technically, if you look at these companies might look at 40 50 p multiple, but if you look at the growth trajectory in the next 3 to 5 year period, we expect a lot of these companies to give a CAGR 20 to 25% kind of EBITDA kind of expansion. And if that is the case, then I think on a 3 year forward basis, most of these companies look quite attractive. Within the agrochemical space, we like PI Industries because this quarter they are saying that they're going to launch 7 molecules, which they did almost 1 molecule in the last quarter. Their sales momentum in the last 3 year was close to 16-17%, which they are saying it is going to increase to 21%. And the capex intensity is increasing. So company saying that we are going to do a capex of more than 550 crores. So I think these kind of capex, and mostly through internal accruals, is a clear sign that a lot of strength is there in the segment. And if I look at overall pie, India is contributing just 4% of the overall specialty chemical versus China doing more than 30%. So I think if this number goes from 4 to 8% itself, the industry is going to double from current levels.
All right. There's a very interesting question from Kuldeep Chawda. He wants to know your thoughts on Tata Motors, and it's very interesting because while Tata Motors has done next to nothing in on a year-to-date basis, its more larger competitor M&M has been hitting new all-time highs and continues to do well. Between the two, which one is your top pick, Ashish?
So, our preference has been M&M, Maruti, Eicher, and TVS in the entire list of automobiles, and this is what we have been recommending for last 3 months on a consistent basis. If I have to pick one of them, then I think at current levels, Maruti looks quite promising to us. The way Maruti is picking up, out of their total contribution, 20% is coming from CNG kind of CNG car, and the way they are pushing hybrid is also is showing a lot of strength, and new capex intensity is very high. So my sense is they have lost good market share from 51% to now 41-42%. There is going to be a lot of I think again they are going to gain some market share, and the kind of valuation which we are witnessing in Maruti, it is available at a 4 year average, 5 year average PE multiple basis. So my sense is at these levels, Maruti makes good sense from a risk reward perspective.
Right. So that's all the questions that we have for today's session. All of the majority of the questions now left in the comments are very stock specific. So me and Ashwin, we both tried to avoid them, guys. But yeah,
Yep, I think on that note, I think we can call it a wrap on this session of Stocks and News and all about stocks. So on that note, Ashish, thanks a ton for blocking some time for us this evening and joining StockTwits and Business Insider India on this conversation. And thank you for your candid thoughts and giving us a perspective on how we should be reading the signals coming from the stock markets. And we look forward to having you back again.
Sure, thank you very much.
And
awesome. And
thanks,
for all
folks.
those who tuned in probably later in the spaces, this would be the first pinned post on our StockBits handle. So do go ahead and listen to the whole conversation, and hopefully you'll find something interesting that might help you with your trading and investing journey.
Yep. And we will catch you next Wednesday around